Good morning. Welcome to Trading Hour. It's a Wednesday morning. I'm Reema Tendulkar. With me, Subhi Upadhyay, and very flat and sideways for our markets at 11 o'clock. The Nifty is just fluttering between the red and the green line. Right now, it's in the green, up 25 points. The Sensex is up 130 points. But you know, that volatility has settled, right? The volatility that we had, the nervousness that we had about 2 weeks back has pretty much settled. Last week, we clocked in some solid gains. This week, we're consolidating. And now the Nifty is just 1% away from its all-time high levels. So, you know, getting into the final, phase of the election, 10 days to go for the result, markets don't appear to be that nervous. Banks, though, banks is a bit of a, trouble spot. The Nifty banking index is down 350 points. And pull up that intraday chart and you would see the sell-off in the banks has picked up, in the last, some time. So 0.7% gone on the Nifty bank. And individual stocks like an IndusInd Bank, HDFC Bank, ICICI Bank, State Bank of India, across the board, banks have lost ground this entire month. Today, of course, ICICI Bank is up, but the State Bank of India, ICICI Bank is down 3.5% for the entire month, and IndusInd Bank is down 7.5% for the month. There is also a bit of sectoral churn taking place. So metals, which led the rally yesterday, are under pressure, and buying has emerged in FMCG, and ITC reports numbers tomorrow. Nyka's today, Jubilant FoodWorks is today. So FMCG is going to, steal the spotlight.
Okay, well, absolutely. FMCG is looking good. I mean, before I talk about the mid-cap market action, because it's really all boiling down to individual stocks today, the mid-cap index is flat. I just want to look at the Nifty as well. The contribution chart is very interesting. After a long time, today we're seeing quite a few of the heavyweights on the Nifty come and add up. Had it not been for that, then the banking sell-off that Reema is talking about, that would have made the picture very different for the Nifty. So look at the right side of the screen and you've got a lot of the heavy hitters finally batting together on the green side of the screen. So Lever is definitely one of them. Reliance is up almost 2%. ITC, Infosys, even L&T for that matter. So there are a lot of other names offering that counterbalance to the weakness that we are seeing on banks today. And Reliance is moving after a long time as well. FMCG, of course, the overall index and individual constituents, ITC, Lever, all looking pretty good. Britannia is up 1.5%. So FMCG is a good counterweight to banks. And then there's Reliance in the mix. Now, very quickly on the mid-cap market, like I said, the mid-cap index is telling you nothing's happening. It's absolutely flat, but don't go by the index. It's all about individual stocks. The advance decline ratio is also even, Steven. I just want to highlight some names because we're getting very, significant reactions to earnings. So on the upside, you've got something like a Gulf Oil Lubricants, which is rallying almost, 12%. There's a JK Tyre where the management commentary is also strong along with the numbers. There's a BEL where the investor call, the results came a while back, but the investor call is throwing up more positivity. So there's more green on that stock. On the negative side, VATX numbers are negative. We'll talk to the management in just a bit to sort of figure out what their outlook is. GSFC and, of course, BHEL is a very clear disappointment from the PSU industrial space. It's a bit of an outlier. We'll talk more about that stock as well. And then, of course, beyond earnings, lots of buzzers. IRB, Hindustan Zinc continuing its fantastic run. Some real estate names there coming through as well. There's Schaeffler. And by the way, a couple of insurance companies, government-owned, government-run insurance companies like GIC and New India Assurance having a good session as well. So short point, the mid-cap market is very, very vibrant. Don't just go by the mid-cap index, which is flat at least for the time being. Okay, so let's move on and get to what we've lined up for you on the show. It's a very packed next 1 hour, and here's what we have for you on Trading Hour. VA Tech Webag has reported an operationally strong fourth quarter. The stock is, of course, under pressure. We will be chatting with the company's management, and we'll talk about the earnings outlook in just a bit.
ACE will be the other corporate conversation on the show. We'll discuss the company's performance in the last quarter with ED Saurabh Agarwal at 11:15.
And our buzzing stocks in focus today, BHEL, HG Infra, Paytm, Metropolis. We've picked out these four, all of them buzzing, and we'll tell you why in just a bit.
And market regulator SEBI has issued guidelines for managing stock price impact from market rumors and a consultation paper around buyback regulations. Abhishek Dadu and Sandeep Parekh will join in a little later on Trading Hour to discuss these developments. All this and much more in an action-packed Trading Hour. But first up, let's get to VA Tech Webag. The shares are under pressure. Largely and operationally good performance. Margins have expanded on a year-on-year basis, but the top line performance was a bit muted, just up close to about 0.8%. Don't look at the bottom line because there was an exceptional item in the base quarter. To discuss the earnings and the outlook, we have Rajiv Mittal, the MD and CEO of Viatech Vibhag, to take a few questions. Thank you very much, sir, for joining in. And this is a stock which has done very well. Shares of Viatech Vibhag are up 46% year to date, and they've doubled in the last 1 year. So my question is on your top line. And if I zoom out of this Q4 performance, top line for the company has largely been unchanged for 4 years now. In FY21, your top line was 2,834. In FY22, it was 2,980. FY23, again, 2,960. And in FY24, your revenues have fallen by 3.5%, back to 2,856. So 4 years, you've been around 28, 29, 100 crore of a top line. Can you explain that? And what can you guide, for your shareholders? Because the stock has done very well.
Thanks, Rima, and good morning to you and your viewers. And regarding this revenue, what you're talking about, I think if you have been following the company over the last 3 years, we have clearly informed all our shareholders that company has moved on to a new strategy where we are going to reduce our construction volume. Being a technology company and a pure play company, we want to focus more on technology projects. Hence, we would do more engineering and procurement. Construction portion was always a pass-through for us, which would reduce our margins. This is what we have embarked on a journey about 3 years back. Hence, you would see that the revenues would not grow, as you rightly said, last 3 years. The revenues have not grown because the construction portion steadily is coming down. Especially last year, you must also note, which we had announced, that 2 of our European subsidiaries we have divested, Swiss and Czech. And those revenues which were there last year is not there this year. So these are the 2 factors. You have not seen a revenue growth, but as you rightly said, our bottom line, EBITDA, PAT, has grown. What used to be 7-8%, today we are talking about 13-14%. PAT, what used to be 4-5%, we are talking about 8-9%. Cash, last 3-4 years, you have seen we are cash positive. We're generating cash. This year also, we have generated almost 280 odd cash, 235 crores of cash, and free cash flow of almost 168 crores. So these are all the metrics you should see, and not only the top line, which the reasons I've given you.
Sure, Mr. Mittal, take that point and we'll go over all of those aspects one by one. But let's just get, more details into what we can expect on the top line. Like you're saying, there was divestment of certain subsidiaries and you've been pivoting towards being a more technology-oriented company. But what will that translate into? You ended last year with roughly a top line of, I think, about, it was 2,800, if I have the right numbers. Yeah, 2,856. Now, on this base, what is a steady state top line growth that your investors can expect? And if you can break that into the international business as well as the India business, where will the growth come from?
Okay, I think we have given in our investor presentation also, we have given an outlook for the next 3-4 years, and we have said that from now on, the divestment is over, the construction volumes are out. From now, we will give almost 15-20% CAGR growth in the coming 3 to 4 years. That's the first guidance we have given. Second, we have said our margins will grow, has grown, and that EBITDA will be also in that 13-14% range, and the PAT will be between 9 to 10% range, and we will remain cash positive, throwing free cash flow every year. This is the guidance we have given. Regarding international business, again, based on our strategy, which we did about 3 years back, clearly 50% of our volume should come from international, and 30% will come from industrial projects. This is the guidance which we have given.
Okay, fair enough. Sir, can you talk about your order book? Your order book has declined on a quarter-on-quarter basis. In the current quarter, it stands at 11,400 crore. In Q3, it was 12,000 crore. Can you explain that for us?
Yeah, very clearly, the country is going through elections, and this quarter, I think because of code of conduct, a lot of decisions are pending. I hope in the second quarter onwards, you will see a good pickup, not only in India, also you will see a good pickup in Middle East and Africa. Our pipeline is extremely strong. Just to tell you, in the last 4 months, we have submitted a bids worth more than $1 billion. So we see a very strong pipeline of orders.
And your L1, what does that number stand at?
See, today, as I said, in the last 3-4 months, they have not opened the price bid. They have only finished a technical evaluation. And technical evaluation, we have been rated very well in our technical evaluation. Now the prices have to be opened to see where we stand.
Okay, so fair enough. We can't get an exact estimation of where all your L1. But again, I'm just going back to the base number, 11,448 crores, roughly 11,500 crores of an order book as of the closing of the last fiscal year. To what extent can this order book grow in the current year? Will the degrowth be arrested? And if you could just break that up into domestic and rest of the world.
Yeah, I think the growth of this book will be at least by around 5,000 crores is what we are expecting. And this is what we expect, 4 to 5,000 crores the book can grow. So it will be more like 16, 17,000, the order book at the end of this fiscal year. And of which I think more than 50% will be international orders and about 40% will be domestic orders.
So roughly 16 to 17,000 crores by the end of the current financial year, right? By March next year.
That's right.
Okay.
That's correct.
So can you, okay. So now that we have the numbers out of the way, can you give us some more color on where the new orders are coming in from? I mean, both on the India book as well as rest of the world. Which are the marquee projects, and from where will you see this additional growth?
I think, Surabhi, it's very clear. We are all seeing, and it's a perfect time, summer. During summer, we all wake up saying water shortage. We have all read what is happening in Delhi, Telangana, Bangalore especially. There's no water rationing. It's a typical summer phenomena. As soon as the monsoon comes, we forget about it. I think we see more sense will prevail. We'll go for more sustainable solutions, which are not dependent on seasons or drought. And that's where company is progressing on manufactured water. What is manufactured water? Normally we get fresh water from the glaciers or from rain. And here we are going to get water from the sources which are not normally used for potable purposes or for industrial use. Basically, water reuse is going to be the big focus area for the company. We are already a leading company in water reuse. And second is desalination. We are one of the largest player in desalination, not in India, but also globally. We have been rated number 5 globally as desal. And we see this too will be the future for water.
Thank you, Mr. Mittal, for joining in and taking our questions. That's Viatech Babak for you. Granules India promoter has sold 75 lakh equity shares in today's block deal. This is what Nimesh had indicated, and we've got that confirmation about the promoter selling stake in the block deal. The stock is up 2.5%. Get into a break. On the other side, we'll tell you why BHEL infrastructure stocks Metropolis is up close to about 4%, and Paytm was down 2%, but now is flat. So we'll discuss all these stocks on the other side of the short break.
Welcome back. Let's quickly run through some of the stocks that are in focus today, starting with BHEL. Now, there's disappointment because the company has missed estimates on the P&L, though the management commentary was positive. Amakshi, but the market still sort of, yet to deal with the impact of that P&L miss, considering a lot of other PSUs came out with flying colors in the fourth quarter.
Well, absolutely, Surbi. A weak set of numbers is what BHEL has reported this time around. When we look at the revenue that has come in at 8,260 odd crores, this is a miss of almost 7% on as compared to what the street was expecting. The street was also expecting margins of somewhere between 14% or so, but the company has reported margins which are much lower at almost 8.8%. On a year-on-year basis, in fact, margins have declined by almost 400 basis points. EBITDA has come in nearly 43% lower and net profit has come in nearly 41% lower as compared to what the street was expecting. Even the receivables continue to be elevated at almost 8,010 crores, and this is because the company itself has some long gestation projects. Apart from that, on the positive side though, the company reported very strong order inflow. It was up nearly 4 times in the fourth quarter, and in fact they've also reported their order book, which is at a decadal high of almost 1.31 lakh crore. So that is the positive, but another positive came through from the management commentary as well. They expect to see nearly 12 to 15% revenue CAGR going forward in the medium term. The gross margins have been declining for the company, and now that is expected to turn as per the management. In fact, they are also expecting 10 gigawatt of ordering activity every year for the next couple of years. They also have 80 train sets of Vande Bharat in their order book, which will get delivered by June 2025, and the revenue recognition is also expected to kickstart then. So overall, the numbers were quite weak. The management commentary was quite positive, and in fact, we also have a note coming in from Macquarie. They say that the EBITDA margin weakness was in contrast to year-on-year expansion or beats that have been reported by several broader capital good names. The order inflow outlook is quite healthy. The presence of multiple moving parts and long gestation backlog nature, however, keeps them cautious as far as the margins are concerned. So given those factors, Macquarie has given an underperform rating, target price of 192 on BHEL, and overall the stock is declining in trade on account of all of these factors.
Okay, thank you very much for that. Moving on to infrastructure, Vivek is joining in to talk about a lot of infra stocks, GR Infra, AG Infra and PNC Infra. Vivek?
Well, all these infra names have one thing in common. All of them have been declared as lowest bidders in various packages that the MSRDC, which is the Maharashtra State Road Development Corporation, actually had bidding activity in the last couple of months. So MSRDC has gone ahead and declared L1 bidders for 6 state expressway projects. This is across the state of Maharashtra, and this is various packages along certain expressways that MSRDC is constructing. So first up, looking at the listed companies, which are the ones that have been declared as L1, GR Infra. Now, this particular company is L1 in 2 specific projects. One project, the package is worth almost 2,000 crores. The other package is worth almost 2,350 crores. So GR Infra, total orders of 4,346 crores, which is where they stand L1 at, and the construction period for all 6 of these projects is in the 30-month mark. Now, talking about HG Infra, again 2 projects over here. One project of 1,554 crore. The other projects, which is the Stupa Communication Expressway in Chandrapur, that particular project L1 status or the lowest bid that the company put in was at 1,655 crore. Total orders that the company is now eligible for exceeds 3,209 crore. And lastly, PNC Infra, again 2 projects for this one as well. One is Access Control Pune Ring Road, worth almost 2,486 crore, and a portion of the Access Control Jalna Nanded Expressway worth almost 2,508 crore. So total orders that PNC Infra stands L1 in currently is almost 5,000 crore.
Okay, so that order win, actually a series of order wins working really well for those stocks. Thank you, Vivek, very much for all of the details. We'll take a very quick break on that note, come back on the other side, and we have another management conversation lined up for you. We will be chatting with the management of Action Construction Equipment, talk about their fourth quarter performance and the outlook. Welcome back. Well, we are all set to have a chat with the management of Action Construction Equipment. And the company's done really well in the fourth quarter. They've ended the year on a high. Revenue is up about 36% on a year-on-year basis. Margins have also expanded. And there's a 72% increase in export sales. To understand the outlook, we have with us Saurabh Agarwal, the Executive Director of the company. Saurabh, great to have you with us. I mean, it's like I was saying, Q4, you've managed a 36% growth at the top line. There is a very strong margin expansion. Your fourth quarter margins stand at about 15.5%. And it seems to be a good year as well, because for the year as a whole, you've grown at about 35%. So all well. But why are you so conservative about FY25? Because for the present year, I think the guidance is just about 15 to 20% on top line growth. Why is that?
I'm very surprised. How do you know that guidance before we've given it? But nevertheless, the 15 to 20% is a very conservative guideline, I would say. And also keeping in mind that quarter one is more or less going to get exhausted for the elections. And general activity does slow down a little. But on the whole, we are very sure that we should be able to exceed 50 to 20% even in the current year, like what we have always been able to do in the past.
So what's the realistic guidance? 15 to 20 is conservative, clearly. So what's the baseline number that we're looking at?
The baseline is 15 to 20. Anything more than this is a bonus. But in saying this, I would also say that it should definitely be more than this because from 1st of January, our industry, the construction equipment segment, is moving on to BS5, Tier 5, CEV5 standard with respect to emission. So there would be definitely going to be a lot of pre-buying starting from second half of quarter 2 and even in quarter 3. As it is, quarter 3 is generally very robust for us because of the festive season. So on the whole, it will be a good year, but it will be a much better position if I comment on the growth in the second quarter.
You're also given two numbers in the past. I think 4,400 of a top line in FY26 and 5,500 crore of a top line in FY27. Do you maintain that, or given the demand tailwinds, the pre-buying that's expected, you could exceed even these numbers?
I think these numbers are very much achievable. And in saying that, in FY22, we had thought we'll do about 2,500 crores by FY24, but we've exceeded that. We reached 2,900. So keeping 2,500 as the base, I think it should be very easy to double up or do more than that in the next 3 years. And in saying this again, it might be also possible to do a 3x in the next 5 years.
From FY24 as a base?
I would say 2,500 crores as a base, what we had planned, if we work hard enough and if the country plays along, even a 3x from current base should be possible.
And this is a 3x growth, top line growth over how many years you said?
5 years.
5 years, for potential 3x growth over 5 years. So Saurabh, let's talk about segments and really what's happening on ground. Which are the industrial segments where you're seeing maximum traction from? And what about pricing? So your margins have also increased very smartly. Like I said, you're at 15.5% in Q4. So how much of this is pricing led and what's really happening on the ground?
We work all across manufacturing sector, infrastructure sector, and also agri. Contribution I would roughly put at 45%, 45% and 10%. Now, within the segments within our company, I think we've done robust growth in our cranes business, even better in our construction equipment business as it was envisaged. And yes, forklift could have done better, so I'm sure we'll cover up this year. Agri, again, I think looking at the overall market sentiment with respect to agriculture equipment, I think we will be able to do a pretty good job at 12% growth. So on the whole, I think revenue growth, we are very satisfied ourselves what we're able to do. And on the margin front, I would say that every about 500-600 crores of revenue would add about 80-100 basis points to our bottom line, and that is what we have been seeing in the past. Now, operating leverage coupled with our cost efficiencies, I would say, coupled with a better product mix, because even in the grain segment, people are now preferring slightly higher tonnages as compared to the past trend. And most importantly, commodity has been stable, rather on a slight decline in the last quarter. That also aided us.
So this is not the margin increase is because of all the factors that you mentioned, operating leverage, softer raw material costs. It's not because have you taken price increases as well? What's the outlook on pricing?
We have taken a price increase from 1st of January. So the benefit of that will again start to kick in from, let's say, March month onwards. So within this quarter, we'll be seeing that benefit come.
Okay. You also indicated that you are exploring inorganic opportunities, particularly in the defense sector. Where are we on that?
I think there is some miscommunication, not in the defense sector. We are definitely looking at inorganic growth within the country and even outside the country, because we are very keen to expand our export portfolio, and we've been doing this last 3-4 years. From a 1 or 2%, we have now come to about 8.5% contribution of exports to our business top line in the last 3-4 years. And I would say that our medium to long-term plans are to go to at least 15 to 20%. So in sync with that, you would definitely be looking at some acquisition outside India to be able to create a base to sell machines from there. Machines made in India predominantly. Yeah.
Sorry, I missed the number of exports. 8.5% currently is the export contribution. You want it to increase to?
The medium to long term, 15 to 20% is what we are planning, targeting, and working on.
And what's the size of the acquisition? Are you likely to conclude one in FY25? Where are we in terms of talks?
I think with respect to our acquisition out of India, we should be able to do something within the current year. Maybe in quarter 2, quarter 3. Let's see how it progresses. The final negotiations are still to be carried out.
Okay, so then in that case, let's just end with a sort of an overview on cash positions, borrowing, your capex plan. I mean, how much you'd be putting to? I think you're adding some capacity as well. So just give us an overview of cash levels and the capex.
See, last year we were able to generate free cash close to about 430, 440 crores. So overall, we have around 700 crores of cash available with us. And we have capex plans in this year as well. So last year we increased our capacity and we reached about 4,000 crores turnover capacity, 4,500 crores rather. And this year again, we'll be doing a capex of close to about 1,800 crores, which will take us to about 5,500 crores of revenue capability. And cash is available with us. We are a debt-free company. We have no long-term debt. We hardly have any short-term debt. So I think on the whole situation is healthy. But here again, I would just like to add that we have also been able to generate, even ROC and ROE beyond our own expectations. So I just hope we continue to do better and maintain it.
Your shareholders are absolutely loving, all of these facets that you described, being debt-free and generating large amounts of cash. The stock really reflects that. Thank you very much, Saurabh, for joining in. Good conversation, and wish you good luck for the year that we are in. Well, on that note, let's take a very quick break. Come back on the other side, and we'll get you the latest in the commodity markets. Manisha Gupta joining in.
Well, let's talk about the weather outside. And all of us are feeling the oppressive heat. In fact, Sirsa in Haryana has recorded a temperature of nearly 48 degrees, 47.8 degrees Celsius, making it the hottest city in India. The heat wave is clearly underway in full swing, not just in Haryana, but across, I think, India. Manisha is now joining in to get us the finer details. Manisha.
Well, absolutely. The heat is on and we are looking at very high temperatures continuing. And this time around, the summer saw an onset early as well by the end of Feb, initial March itself. And we have seen more and more days of heat waves around. This was said by IMD already initially that we could be looking at 10 to 20 days of heat waves in this summer as compared to 5 to 7 days of heat waves in a normal summer temperature there. If you look at the last 24 hours, there are 10 cities which actually have registered the highest temperatures. And this is coming in from various states and cities, by the way. Sirsa in Haryana has registered 47.8 degrees of a temperature. We also have higher temperatures in Pilani in Rajasthan, in Punjab, in UP and MP, where you have temperatures anywhere between 45 to 47 degrees. Surendranagar in Gujarat has 45.5, and you have Maharashtra also recording 44 to 45 degrees temperatures. Surprisingly, Una in Himachal Pradesh has registered a higher temperature of 42.4 degrees. I mean, this is the hills, Himachal Pradesh as well, looking at 40-degree temperatures in various cities there. In the next 5 days now, IMD says that there is an expectation of a higher heat wave. So there are red alerts in various parts of states like Rajasthan, Punjab, Haryana, Chandigarh, Delhi, West UP and parts of Gujarat as well. What is a heat wave really? It is about when you have plains and maximum temperatures, the day temperatures that is, crosses above 40 degrees for more days than one, then it is called a heat wave. When you're talking about coastal areas, then it is 37 degrees or above is what defines a heat wave. And for the hilly areas, maximum temperatures above 30 degrees is what is a heat wave. And we've seen temperatures actually beyond 35, even 40 in various parts of Himachal Pradesh. These are concerns and there are various advisories that the IMD also has put out in sense of infants, older people, and advisories of not stepping out during the peak afternoon season there. Remember, it's not about the maximum maximum day temperatures, but the maximum night temperatures as well, which seem to be on the higher side. But that is expected until this Friday, until 25th and 26th of May is what the current anticipation is, that you could be looking at higher to very high heat waves.
Okay, so higher to very higher. That's the story of the temperatures across the country. Manisha, thank you very much for getting us the latest. We'll take a break on that note, come back on the other side, and we'll get you some trading calls. We'll have Sachidanand Utrekar of Trade Bulls joining in.
Welcome back. Let's talk technical. Sachidanand Utrekar from Trade Bulls is now with us for a quick technical check on the market. Morning, and thank you for joining in. First, thoughts on the Nifty Bank and the kind of fall that we're seeing now, extended close to a 400-point fall. What have you made of that? And then your stock picks.
Well, good afternoon, and I think the market is stable. In fact, if you look at the Nifty, it has been holding on to its 5-day exponential moving average really well. Even today, we saw a swing support somewhere close to around 22,840, where its 5-day exponential moving average is placed. And the higher cluster is placed somewhere close to around 22,610. So I think this particular trend that we have been seeing for the last couple of trading sessions on the bullish side may continue. When it comes to Nifty Bank, there's a very strong support zone which is built at 47,600, 500 kind of a zone. And on the higher side, it has been witnessing some profit booking somewhere close to around 48,200 mark. But when you look at the intraday placement, there's a good possibility that in the second half we may see a good recovery in Nifty Bank as well. We are expecting a price closing somewhere close to around 48,000 at the end of the day. So I think this declining opportunity is very good, and probably we may see a reversal even in Nifty Bank. From a trading perspective, one can keep a stop loss somewhere close to around 47,550 on the lower side and utilize these declines towards 47,600 for a quick up move towards 48,000. When we look at the trading scenario, I think there are two stock ideas which are very prominent. Disclosure would be that we have recommended these stocks to our clients. The first one is Lupin. Now, if you look at the overall structure, the stock was finding itself difficult to surpass that hurdle at around 1,700. For the last 14 weeks, we have seen some distribution near that particular area. But if you look at today's OI addition of close to around 5%, the level at 1,700 has been broken out confidently, and that's why we believe that this particular momentum may push the stock towards 1,760, 1,780 kind of a cluster. So we are recommending building long positions here. We are expecting this particular momentum to continue throughout the day. From a trading perspective, the first target would be at 1,760, followed by 1,780. The stop loss for the trade can be placed somewhere close to around 1,698. The second call is again a long call on L&T Technology Services. Now, if you look at the overall structure, the stock was in a lower top, low bottom sequence. But last week we saw a very confident reversal pattern, which is a bullish Harami, re-establishing the support at around 4,300. On the daily scale, again, the daily RSI has moved quickly above that 50 mark, and that's why we believe that there could be a good recovery in this particular counter. Overall, we are expecting a move towards 4750. Trading longs can be established here. The stop loss can be placed somewhere close to around 4540.
Okay, Sachidanand, we'll leave it on that note. Thank you very much for joining in and giving us a couple of those trading ideas along with your index strategies as well. Well, we'll take a break on that note. Coming up on the other side, we'll get you a comprehensive discussion on a slew of new proposals that SEBI has come out with. One, of course, is a framework which is going to come in force from the 1st of June, and that is with respect to verification of market rumors, and then how the unaffected stock price should be determined when it's when it's a QIP, etc. And then a couple of other measures as well that have been announced yesterday. So we'll have Khaitan & Co.'s Abhishek Dadu, as well as FinSec Law Advisor Sandeep Parekh joining in to demystify, decode some of these developments for us. Welcome back. Here with us on Trading Hour. Now let's get down to understanding all that SEBI announced yesterday and proposed yesterday with respect to, well, the first part of this is, the framework that's going to come into place when it comes to market rumors. How should they be verified? And how should then pricing be looked at, the price of a share or a security where a rumor has been verified, when it comes to further corporate action, whether it's a qualified institutional placement or any other corporate action. So that's one part. Plus, there is a draft proposal in the works for a lot of other things, including buybacks, including merchant banker regulation. So let's take it step by step and go across to Yash. For the first part first, Yash, let's talk about this whole market rumor business and this way of finding out what is the unaffected price. Explain it to us.
Well, Surbhi, the market regulator, SEBI, has issued guidelines when it comes to managing a stock price in a situation where it's been affected with a market rumor. Now, market regulator SEBI has introduced this concept on unaffected price to mitigate stock price fluctuation. Unaffected price will have to be determined within 24 hours of material price movement, excluding the market rumor. Now, I'll explain exactly what this means. But first, let's come to the purpose. The purpose for introduction of this unaffected price concept is to exclude any sort of price disruption caused by market rumor while arriving at a price for any sort of corporate action, as you mentioned, be it a QIB, OFS, or any sort of corporate action where the price of that share really comes into, takes a center stage. Now, what does the regulation say? Regulations requires listed companies to verify market rumors if there has been a material impact in the price of that share. SEBI circular states that unaffected price shall be considered for the transaction provided that the rumor on this particular security has been clarified by the company within 24 hours. What is unaffected price? It's the share price that would have existed if the impact of this market rumor on that share price is to be excluded. Now, how does one arrive or how does one calculate the unaffected price? Now, the calculation of adjusted volume weighted average price will come into attention when it comes to calculation of unaffected price. If, let's say, a market rumor has come today, then in that case, the change in the volume weighted average price of that security will have to be considered till the end of the trading date tomorrow. Now, once that value has been derived, it will have to be excluded from the average weighted average price of that security to arrive at the unaffected price. I'll just give you some numbers. If, let's say, the price of the security before the market rumor is 100 rupees, with the market rumor on day one, it goes to 105. On the next day closing, it closes at 110. Which means 10 rupees is the incremental impact of that market rumor on the stock price, which will have to be excluded, and the unaffected price, which will have to be considered for any sort of corporate action, will have to be taken as 100 rupees in this situation. As far as applicability is concerned, this new framework will be applicable on the top 100 listed companies starting June 1st, and then another 150 companies, which means a total of 250 companies from December 1st.
Thank you for that. But Yash, SEBI has also released a consultation paper around buyback regulation. What's come over there?
Well, two important changes as far as the buyback regulations is concerned. First one is with respect to the reference date. Now, the reference date for opening or the launching of the buyback will have to be considered as the date when the company announced the intention to go for a buyback. Currently, the date which is to be considered as a reference date for the launch of the buyback is when the company does the board meeting to approve this particular buyback. Second one is conversion of ESOPs or convertible instruments to employees and shareholders. Now, these ESOPs to employees or shareholders will be eligible to be converted through a buyback, which wasn't being allowed by the market regulator so far.
Okay, all right, got it. We have our hands full, Yash. Thanks very much. Lots to discuss. And we have two experts to help us navigate this. Abhishek Dadu, partner at Khaitan & Co., as well as Sandeep Parekh, founder of Sensex Law Advisors. Gentlemen, thanks very much for joining in. So let's sort of break this up and deal with the market rumor business first to understand if the objective is actually going to be met. So, Sandeep, let me launch this with you. I guess the objective is to ensure that whenever there is a deal happening, ultimately, the pricing of that deal is not impacted by the rumor. Do you think SEBI is able to achieve that with this framework?
I would think so. I think if you read the circular, it's very confusing, but I think the principle is very, very simple. Any impact of the rumor on the price, and even after it's been debunked, because the company gets 24 hours to debunk it, even the future price fluctuation, you remove that the impacted price from the current volume weighted price. So there's a little bit of confusion how to calculate it, because it's not just that 1 day period that you remove, but a much longer period of time which is removed for removing the influence of the rumor from the look back period that is required for basically the floor price of qualified institutional buying mechanism.
We get the pros of this particular, method that SEBI has introduced, Sandeep, but what are going to be the cons, the challenges of introducing this?
I don't think there are any challenges, except it's a little confusing to read for the first time, but I think it's fairly mathematical, and I think I really don't see much of a con in introducing, because I think it reduces the burden on companies who need to kind of price a QIB based on an artificial number. So it's kind of trying to remove that disruption which comes from that artificial number, and I think it's fair both on the investor and on the company. So I really don't see a con to introducing this.
Fair enough. Let's actually bring in our other guest into this as well. Abhishek Dadu of Ketan and Company. Abhishek, what do you think? Do you think the circular is clear enough? Does it do the job?
First of all, thank you for having me. Absolutely, I agree with Sandeep on all counts. I think it's a very helpful circular. I also think that with some analysis, it becomes clear enough. The idea really being that historically, market rumors or leaks have plagued the public M&A industry. There's a rumor that comes out, stock prices suddenly shoot through the roof, and then the deal in some ways might become commercially unviable. So it doesn't help the people doing the transaction. And at the same time, it doesn't help the regulator or the public, because they don't know what's happening behind the scenes. I think what SEBI's done here is they found a perfect balance. They've actually incentivized the deal makers to go ahead and come out transparently, to say that, look, yes, a deal is brewing, there is something in the mix, but at the same time, SEBI's guaranteed them price protection, which is really what they want. Because at the end of the day, no one has a concern in disclosing data. It's just that if the data results in the deal failing, that's the problem. And they've solved for that here. They said that from the date that you effectively have a price spike, which is on account of the market rumor, till the date after you verified the market rumor, your price is protected. You look at the price as on 1 day prior, and the same price sort of continues for a period of 60 days or 180 days, depending on the nature of or the stage of your transaction. So overall, I think it's a great move, and this will definitely help public M&A deals in India.
So, Abhishek, let's just, help us understand this with an example. And I also want to understand what it does to the secondary market, traders or investors. So if, let's say, there is a deal happening, and this is not just preferential issues, right? It could be maybe an M&A deal, any kind of deal, right? If there is a deal happening and there is a price X, the rumor comes in, the price becomes X plus 20, then for the purpose of calculations, the 20 is taken away. But is there clarity on what happens to all the speculative buying and selling in the interim, in the secondary market? And how do you think this will play out?
Right. So, okay, that's a very good question, actually. So there are two parts to this. The first part is the people who are entering into the transaction, right? So here, let's assume a situation where you have a secondary sale. The promoter of a listed company is selling his shares to a third party, for example, a private equity buyer. Or another situation could be where the company itself is doing a primary issuance to a third party, which is, again, let's assume a private equity player, right? Now, what would happen is the price protection is there to only protect these transacting parties. It's not there to protect your daily sort of traders, your retail guys who are trading on the exchange. The idea is that they are given information, and now based on that information, the stock price moves up or down, and they take an informed decision. But the people who've done a negotiated deal, their price is protected. So if you do a secondary sale, somebody is buying a stock at 100 rupees. This is negotiated as part of the share sale transaction. Now, when the rumor hits, the stock price suddenly goes up from 100 to say 120 or 130 over a period of a week, 10 days. Now your negotiated SPA price will still stay 100, right? Because that's your agreed commercial price. But your open offer price, which is under the takeover code, will suddenly go up because that's based on a 60-day volume weighted average price. Now what happens there is the overall deal value has gone up, because while they were earlier assuming that they would do the underlying SPA at 100 and the open offer at 100, the SPA remains at 100, but the open offer has gone to 120. What this does now is that it ensures that your SPA and your open offer both stay at 120. So the parties are fully protected. But for third parties or retail traders, this protection is not really for them.
I guess, I mean, in terms of instances where an open offer is getting triggered, I think third party is still sort of impacted. Positive or negative is a different connotation, but because these new rules will impact that that open offer price, like you mentioned. But I guess in other instances where it's just a deal, it's just a placement, that's where the question is, what about protecting retail interest? Sandeep, come in on this. But should we be so worried? Because I think they've also put a time cap to this, right? Companies have to verify within 24 hours. So whatever speculative games are happening, I mean, the parties transacted, they're protected. Rest of the janta, but I guess we're only talking about a 24-hour window. So essentially, it's just one trading day in which people can play all kinds of games. So nothing to get too worried about.
Not at all. In fact, maybe a little unpopular for saying this, but I think you have two classes of people here. One is the company and the investors bringing in money through this QIP issuance, which is going into the company. And the other classes, we talk about punters who are going in and out 10 times a day. And I don't think the second class needs any protection, really. It's the first class which needs protection, which is really kind of money which is going into productive uses. Anybody who's invested over a period of 1 or 2 or 4 years is not going to care about any of this. So I really don't see any point in protecting punters. I think it's more important to protect the investors who are there for the long term, who may have come in through maybe for a direct investment route to invest in a company which is then going to use it to improve a plant, as opposed to ensuring some kind of benefit for people who move in and out of the market on a daily basis.
Abhishek, quick word on SEBI's consultation paper on buyback. What are the key tenets and what have you made of it?
Yeah, no, I think it's a good move. The idea being that they are covering a few sort of gaps that were there, especially on the ESOP sort of flexibility to participate, etc. This has been a concern for a while, and it's good to see SEBI just plug those loopholes now. And I think the general trend for SEBI has been that. If you see that it is a regulator now which is listening to the industry, it is trying to plug the loopholes to the extent possible.
Quickly, we just have 10 more seconds. Sandeep, on another important point where companies are coming in listing, and then there is the minimum norms that promoters are bound by. I think now the rules are saying that certain other category of non-promoters, their holdings can be clubbed with the minimum promoter lock-ins that are required. How do you view this?
Yeah, no, I think that's also an excellent news, because what has been happening with all the new age promoters was that they did not have a significant stake in the company, and most of their assets are really paper money, right? So you might call them billionaires, but all the money is in one company in shares, and therefore I think this ability of the flexibility of allowing other people to also contribute towards that is going to have actually very significant impact on the quality of issuance which comes in the future, because many people who could not come to the market because of lack of cash will now be able to meet those requirements.
Okay, so perhaps good for new age companies as well. All right, gentlemen, thank you very much. Really appreciate you joining in and sort of simplifying to a large extent some of these pretty complex new moves that SEBI is looking at implementing. Thank you for tuning in. By the way, just a reminder that these new rumor norms and the unaffected pricing norms for top 100 companies of the country by market cap, they come into effect from the 1st of June. Completely out of time on this edition of Trading Hour. Thank you very much for watching. Stay tuned. Halftime report coming up next.